Welcome guys, Market Sniper here, talking to you about a special moment. In fact, it was a tweet by Porter Stanbury, who I was keeping half an eye on, who reminded me of something that I've spoken of before that sees me take this topic to you right here, right today. And the headline of this YouTube will indeed be on that topic: when US debt markets go no bid. No bid. Now, no bid. There's bots, there's primary dealers, all roped in to make some form of a market. But let's just be clear. The immensity of the vast debt markets actually probably doesn't have the highest trade volume at all times. And that market cap of those huge debt markets, which is the foundation of your borrowed into existence fiat, both of debt and fiat, they are married and intertwined together. They can't be separated, or people encourage you to think of them as separate silos. When the debt markets go no bid, gold markets go no offer. What does that mean? Nobody of any meaningful volume has got a bid on the bid side, a big overhang of selling out of the debt markets. Of course, rate spikes will be associated with that. Currency volatility will be associated with that. That will be the distraction. The key asset, the real reserve asset of millennia, will go no offer. Nobody selling, very light selling, quickly consumed in a chase of the bid of the offer stack upwards, as there is a chase of the bid stack downwards on the debt markets. In short, the disorderly nature of this will be such that I am pumping my fists and shouting, USA, USA. No, I'm not doing that. I am saying debt market collapse, gold market pump. And these two things will probably occur potentially simultaneously, if allowed to, by your central banker controllers. That will probably also have some form of geopolitics and voodoo that they might be leading, and war and everything else as peak distraction. And the rate of accumulation of debt is such that it's turned into an absolute chronic problem. Let's discuss that new fresh issuance of debt and money. Remember, it's in dollars. The debt as asset is being issued at an unbelievable rate. And in fact, if we have a look at that chart right there, you will see that you surged to 35.75 trillion in a spike that seemed to come out of nowhere. Look at that little squeezy over there. Here it comes. Squeezy, squeezy. Mega surge. That's right. 35.75 trillion. That was tail of September coming into this month. Who is spending like this on such scale on your behest? Bear in mind that every new dollar that gets borrowed into existence is dilution of the current ones you hold. Dilution, dilution, dilution. In short, if you have 100 shares in my business and there were only 200 in issue, you own 50%. If I keep taking it to 300, 400, 500, and you're still sitting on your 100, you are being diluted away. That is inflation of the shares, and sees reduced buying power of your fiat or reduced holdings in my corporation. And this is what Granny Yellen is doing. She doesn't talk too much about this. 500 billion was added to the national debt in the last 3 weeks. In fact, you did 345 in 6 days, $500 billion in 3 weeks. Front running the election. That's also something quite political that is indeed possible. And of course, on the political front, we have Labour sending people to campaign for Democrats in America. Isn't that foreign interference? Why would they do that? Why is a sitting government in the UK sending people to America to influence American voters? I would ask, and they're paid by the British taxpayer. Does the British taxpayer approve of that, by the way? Sending one party's workers that are currently in power in the UK, who's paying for that? Who's paying for their tickets and accommodation? Very interesting, very interesting. Americans, send them packing with a cup of tea. The new debt accumulation rate is a major step up. Treasury's still to respond on a missing report. We're going to cover that in a minute. But all is good in the debt markets, I say, with my SARK emoji in there at full tilt. In other totally unrelated news, gold is ripping higher. So let's talk about the aspect about markets and where we are. We're going to come to the Treasury, but I wanted to show you another good chart. Bravos, caution, job openings have been falling off a cliff. So this is like our previous YouTube, which was a lengthy one, and a lot of people enjoyed it and really valued the comments, but it took time, about how can you be retail wrecked, consumer wrecked, and have everything going down, yet the stock market moves to all-time highs. And that is a rotation out of debt, because the debt rates are going higher and devaluing. People are selling quietly out of the debt markets, and they're moving into already overpriced equities, and you guessed it, gold, and that is a dump of the dollar, but more importantly, a dump of the debt markets, which is the big bubble. The biggest bubble is a debt bubble. And what's actually happening is the consumers, in fact, wrecked. Job openings declining rapidly. Don't forget, this is one heroin spike that came as a result of 2020. It is the Irma Thurman moment with the adrenaline syringe, with John Travolta jolting the heart back to life with the big old whack into it and a surge. And that is the subsequent. You may have got the heart ticking over, but the patient ain't well at all and is slipping backwards into a state of dis-ease. So the employment market has been the great lie. This is something illustrating actually there is some truth in terms of where we truly are in the spectrum. It is a difficult old time for the consumer. You're seeing credit cards at all-time highs. You're seeing a lot of things. So you've got Bank of America that came out and said gold is the last safe haven. So let's just clarify this. An intermediary of the Federal Reserve System that will borrow money into existence with the license provided by the central banking cartel. A major intermediary which has an investment banking arm and will be a primary dealer in the bond and debt markets is coming out with a report and saying gold is the last safe haven as Treasury faces risks with USA debt. Now, you waited for Bank of America to say that till today, the 18th of October. You've heard us saying it for 15 goddamn years that this day will come where even their own participants in the fiat debt-based system start telling you that their system is broke, and the old legacy system that apparently is a pet rock and doesn't pay any interest according to Warren Buffett is suddenly the safest place in town. What is Warren going to do? He's not bought stocks in a major way for 7 quarters. He's actually had 4.2 billion of buyings on 98 billion on sellings. He's had a 93 billion net for just this year of sellings, and he's sitting with 270 plus billion in the money markets earning interest, which is a guaranteed loss in a negative real rates environment where the inflation rate truly is higher, not what the BLS tells you, but he's still rather put it there than hold on to his Apple and his Bank of America shares, who are busy saying, pet rock time. How interesting. Maybe he sold his shares because Bank of America says it's time to buy pet rocks, and he vehemently disagrees. Somehow I doubt that, though. I doubt that's the reason. I doubt indeed that's the reason. In fact, Warren has invested before in silver on some great scale. And I wonder if he's going to start buying insurance, the insurance we all should be buying. The links are below. Don't forget to buy for the US through ITM trading, through the UK and the rest of the world, through pure gold and Bullion Vault for accumulating the internet variety that you'll later turn into physical once you've got scale and can do on a monthly basis. Why not just do it? Start now. Every month you're a little better off. And guess what's happening? She's a running, and she's a running hard, and we're going to show you in the charts. But first, we must talk about what's going on with this tweet. This is Charlie. Give him a follow. Belello, it's an interesting post. He says if JP Morgan had to report earnings and then subsequently didn't show up, that would be quite a problemsome event, and maybe Dimon would be fired or censored at least and told, why are you hiding? And by the way, some companies have done that and failed to make their earnings call, and typically there's a little bit of accounting issues. It's usually when their auditor doesn't want to sign and they're saying, well, can we try this instead? And you know what? That's usually because of dark arts, bad news, and malpractice. Call me suspicious, but every time I've seen it in the equity markets, that's usually been the reason behind it. It's never been a sterling set of results that they just couldn't get ready in time. Those, they always appear to get ready in time. So 2 p.m. on the 8th business day of every month, the federal government is supposed to release their monthly Treasury statement. Charlie was saying. The report details how much money the government is taking in via taxes, the income. Now, that's got a little low and shoddy, I imagine. And also, it reports how much is going out via spending. Now, we know Yellen, good old Granny Yoda, is very intent on collapsing the US economy and has been handed something that was already in a good state of almost collapse, and is ensuring she's doing her damnedest to debt bust the entire system. There is nothing frugal, there is nothing sensible that's been going on there. It is inherent full speed ahead, never mind the icebergs. And that's pretty much where we are with good old Yellen. No explanation for the report not being ready 2 days later, which begs the question, what are you trying to hide? The answer might be what was shown in the previous 4 months, which was over $1/3 trillion in May, 2/3 trillion in June, 250 in July, and well through 38% trillion in August. This is kind of interesting. 1.6 trillion, that's about 400 billion a month. 400 billion a month in excess spending, a budget deficit. So it's what's not covered by revenue that you're borrowing extra on top of. Wow, this is somebody hell-bent on destroying it. And now you know that in the going into September to October, you shot up. You actually shot up by that chart, that hockey stick leg that I've already now forgotten the numbers, but I think it was the better part of 500 billion in 3 weeks? Was it 3 weeks or was it 2 weeks? Wow. So you're halfway to a trillion in less than a month. In less than a month. So this is how it's going on the debt. And of course, yeah, there's genius. A little bit of political statement going on there under there. But they're all to blame. You think Trump fixes that? No, he doesn't. You think Elon with Trump fixes that? He doesn't either, I'm afraid. This, my friend, is literally vertical dive 747, maximum speed. It's literally holding on at 850 kilometers an hour. And then I give the controls to the finest pilot in the world 1 nanosecond before we hit the mountain. What does the best pilot in the world do? Absolutely nothing in a nanosecond. It doesn't matter. It doesn't matter. This is Inception, the movie, my friends. The car is broken over the bridge and is in flight and absolutely 100% hits the water. It doesn't matter who you last minute teleport in to drive. The car has left the bridge. It is in a collapse. It doesn't matter on the pilot. No one changes this. Mathematics wins. Just like gravity and the water. It is gone. The game is gone. You are participating in a slow motion car crash for which you are in the inception car and you have left the bridge. The wheels may turn. There is no relevance to that. You're hitting the water. That is it. The 747 in the near vertical dive is at the foot of the mountain. The best pilot in the world will not change anything, and there's no good pilots to be seen. Let's to be thinking that either one of left or right will be saving you. This is gallows humor for a Friday afternoon. I'm sure they'll come in and give the silver market a little slap down, as they usually do, and take a bit of the shine off the gold. But let me just say this. It is too little, too late. We are on a runaway gold market. The title of this video is If and When, and I would rather say when rather than if, the US debt markets go no bid. The bid coming up under the stack. And there's so much on the offer and everyone is trying to get out. Nobody wants to be toxic bank anymore. The Fed will become the monetizer of last resort, and they will have to consume on such a level that people will be asking questions about their inverted pyramid of equity and balance sheet and debt. They will become the most leveraged institution, along with London, Benelux, Cayman Islands, and probably a gun to the poor Japanese being forced to hit the buy button. Do I really have to? Hey, little man, I will beat you very hard. We'll come with another Hiroshima. Okay, like that. That's how it's going to go. Those are the allies in collapse. The orchestrated allies of collapse that will take the same poison pill with their tied to the mast King America in the debt feast that is coming, brought to you by Granny Yoda Yellen. That's right, part of the private banking cartel. Now you're CFO of corporate America. That's right, you are a company, by the way, America. It is a big corporation, and you ain't on the board of directors. You're not even a shareholder in your own country. That's how it is. Let's go to the charts after all of this mischief and mayhem and talk to you about what's been happening today. So, this is it. I want to highlight again the key moment that was when you got up the fourth time. This was your fourth time, a lady, when you broke the 2000. Many of you will realize we covered 1, 2, and 3 to the left. There's 3, there's 2, and 1 was the high of just post-COVID into 2021. Anyway, this wind-up was your entry gift of all gifts. We warned it would be over-performance for you, and this should have been the place of entry for you. Over there, you could have had a stop there, and you are now reward to the good there. Now, you can calculate as a risk and reward. I can go through it with you. Let's do that, by the way. This is your risk reward so far. You're around about 29.66. We have been long and investment in gold for most of this entire period. And we did say something. You're likely to have a rest at some point because some of you are going to relent and buy at just the wrong time. Just like our friend who was describing his pal, and I'm going to need to go back to my Twitter stream to highlight it. That's it right here. My neighbor just told me he went all in long on Nvidia here today for his retirement. Oh dear, oh dear, oh dear. 58 times sales. Not earnings, sales, 58 times sales, because everything AI. Yep, retail taxi driver indicator just triggered. That's when the cab driver in the car is telling you, buy stocks, buy stocks. Are you in Nvidia yet? I'm making so much money. I've just doubled down and mortgaged the house. That's your taxi man indicator. It's the shoe shine boy indicator. It's your dentist indicator. It's all those 3 guys that you should treat like radioactive material. You just said, what? You get straight onto your broker and you get short. You sell everything and you double down short. I'm kidding about that, get short, but you should take it as a very serious warning of overextension to the upside as the debt has leaked into the only other market it thinks it knows, the equity market, and is now finding it into the reserve asset that Bank of America says, hey, it's not just stocks. You can go into gold. That's right. The debt purveyor, the man who borrows money into existence, the man who's extended all the credit cards and given personal loans, the investment banking arm associated with that casino that has been the issuer of those same debt instruments, taking fees, etc., and selling them to pension funds that brought you subprime, along with the rest, never mind robots signing deals, securitization. We'll sell that toxic waste to Europe, the dumb German and Swiss banks. They'll happily eat it up like pigs in poo, which they did too. Wow. Those guys, they're saying, you know what? We don't like the stank of our own system no more. It's time you went somewhere else. And what are they saying? It's gold. And at that same moment, Mr. Retail Average American is buying Nvidia because AI is the way. it shall dominate, just like .com, just like all the others. You know, there were companies called Cisco and Sun Microsystems, and Scott McNeely of Sun Microsystems at 10 times sales said, we never asked for this, it's too much. It would take 10 years to get paid back if we didn't pay a cent in salaries, tax, or rental, or anything for an ink cartridge on a printer. It would take 10 years. I can't make sense of it. Welcome, Scott, to 58x. Your sales. Well, I'm sure Scott McNeely is not buying those shares either. Anyway, by the way, on NVIDIA, small side note, this is all about gold. We're going back to the gold charts in a minute. But the CEO, very shortly after listing, was called out and given an SEC bad mark after our friend Mr. Cahodas was highlighting anomalies with things that they were doing and passed the information to the SEC. Isn't it interesting? Kind of like elongated muskiness with his hyper claims on Tesla that often don't turn out, and all his predictions and what he'll be doing by then. Isn't that an awful Cybertruck? Anyway, I digress. Let's get back to gold. Let's get back to gold, because gold it is. Here we are. Where do you not chase in? Well, for us, we've got targets on the big bear flag, which goes up from here to here. We've got a target that sees us at the 2890s. We've spoken about the doorstep of 2900s. And on a smaller flag, let's talk about the smaller flag as well. We drop down to the 4 hourly and show you, this is beautiful flag compliance, by the way. We called this as it broke and said you're getting a break, key break, return move into literally the apex of the flag, the move up. That takes you also up to around 2,800. Low 2,800s. Do you think they are going to let everything run all the way to 3K this year pre-election? I'm not so sure. I think we could have a little bit of drama and some events round about this time, and we see 2890 going into 2900 being key flag targets. Is gold going higher? Absolutely, and well beyond. We already have a beautiful chart for explaining that to you and more, which I'll be showing you on the bigger time frame. The key is, if someone who doesn't understand position sizing, stop placement, enters in at a wrong moment and eats a pullback, he can be washed out of the best trade of his life. In short, you could have got everything wrong in investing. Your entire career, you could have got every trade wrong. You could be wrong umpteen times in a row. You could be just right on this one key trade that we are talking about, and I would say macro holding position, both investment and a lightly leveraged trade, providing you have patience and reasonable costs. And you could see your pension and retirement looked after, your children's pension and retirement looked after, and the great-grandchildren's thereof, in the single move that is the sign of your times. I'm afraid to say it is the sign of your times, the fake money era, the financialization of everything, and the reversion back to sound principles as truth is enforced back upon you. The great borrowed into fiat existence debt-based system is in peril, and there is only certain things that can save you from what is coming. And that day and that moment, when the US debt markets have insufficient bid and there is a contagion overhang that has to get out at any cost and is forced to sell and doesn't hold the line, you will be finding that at the same time that their gold market will commence to run. By the way, those beeps, what a noise. We've just had an alert on silver and silge. I owe it to you to update you on how that's performing. Oh wow, silver junior miners, fancy that. They are kicking on, they are waking up, and you are seeing a movement to the upside as we run. And by the way, we have certain setups. We have certain setups that we'd love to share with you as community members on miners, both silver, gold, and general miners that are multiples of precious metals, and possibly others too. And all you need to do is click that link below and book a call. But hey, if you're scared of booking a call, it takes effort. It takes talking to someone. I know People are device-ridden nowadays. It's a bit scary to actually book a call and speak to someone. It kind of, it's going to require paying attention and all of that instead of dopamine. What you can do is just hit the link below that for the mini-series, and you can watch beautiful videos that we showed you that introduce things in passively. You can sit quietly. You don't have to speak to anybody. You can just listen over this weekend to our mini-series prepared specifically for people that aren't too sure about this whole investing thing. It never turned out a success for them. Aren't too sure about this trading thing. We're not day traders, by the way, but would like to make money and not be caught on the wrong side of a wealth destroying event that is case study for 300 years in financial history. People from the future will be asking, what the hell was those clowns thinking? That's right, you are in a clown world. All those memes are actually true. That's why they're so funny. That's why they're so funny. You are being banged up the jacksie by the mercantilist class that are inflicting a super high level of inflation that is destined to diminish your financial buying power to the point of UBI, serfdom, and CBDCs. Your resistance is to protest in every possible way and defend your personal wealth in the highest form of ways, and that is golden. And as I say, the links for the mini-series are below. The links to secure yourself in gold are below. And you can hear the alerts pinging. We had Silge, which is the junior miners, on one of ours. It's now taken up all our alerts to the upside. And we also have, no doubt, silver itself. So without further ado, I'm going to take you, because this is breaking news. Breaking news. It's real breaking news. Unlike the others that plan their breaking news, you're actually getting breaking news. That's weird. It's kind of like it's almost like it's truthful. There you go. Silver is pushing on up. I want to highlight to you this particular chart, which we did for you some time ago, and said, you triggered. We told you on that last video, not the very last one, the one before, that you just triggered a macro upside HVF on silver that will take you through to 330. We told you about that, and we even said, let's do it on 2 months. It's such a long time. This is the upside HVF of my entire life. I told you about my little old birth date on that flat-bottomed inverted HVF. I didn't even know where booby was to have a little suckle, and the first inverted HVF that I can probably find on a real chart was showing up. Little did I know, there I was, born there, and you had your spill on a silver, and now I am today drawing them. As someone who's lost all his hair, or chooses to cut it off at least, the little that's left, 56 years in the making, friends. If you have any idea of what we do with HVF method, let me tell you, this is the single biggest, largest, longest HVF I've ever seen in my goddamn life, and they lead to fast-moving breakouts of immense momentum that can be taken on a very short risk with a very, very high reward. This is a volatility-based setup for which the volatility behind this asset is going to become so vast, you're going to see numbers skipping at a rate you can't fathom in single days, weeks, and months. And this triggering, which is the key moment where it is absolutely gone from a possibility of such an event occurring to a much higher probability of it occurring, has occurred with the takeout of this third high right now. And you are in the 2-month period. Still, even though I reminded you a couple of weeks about this is your breakout, I'm here to tell you again, it's your breakout, and more things are happening, including timed alerts that go beep while I'm busy recording you, because I use the same machines for my YouTube that I use to trade. This is us right here, and you are being told in real time that the markets are shifting. You've got the silver junior miners starting a shift. Let me tell you, gold is first, though. Gold is still first. So there was another tweet where I tried to help somebody who was having some problems fathoming the way of the world. And here's what he said. He said, how the actual F can gold continue to hit all-time high and silver still be getting whacked? Drives me insane. Drives me insane. I should be on a winning ticket. How come it ain't playing out that way? Huff and puff, I can feel the fury with the F-bombs detonating. They 2,000-pound F-bombs, those ones, much like other places. Well, God markets move first and hardest at the first stage. And we are just stage 1 on a rollout of stages of contagion collapse of a financialization system. So far, for example, in the crypto bull, Bitcoin dominance went from 40% to nearly 60%. Everybody else sitting in alt saying it's coming, it's coming, it's coming. They said no to the bus and they waited for another one. And those buses ain't coming. You've got to let the stages play out. You start with gold. Having said that, we just got alerts on silver, and it's clear that silver is about to move and has begun moving a little bit. But when it does truly begin moving, you will see. And this, by the way, for the target, for what we suggested it would do, is up at $330. $330. This is a first macro HVF. I absolutely expect it to well overperform. I've spoken of 4 digits before. So please understand, this is a beginning, or you might have your first major pullback at there. You're looking at a different dollar and a different silver and gold. In fact, the same silver and gold and a totally diminished fiat environment across all currencies, which will be affected by this grand collapse. That is the first target projection where you might take some profits off. By the way, there's first interims and second interims along the way, where it might pull back against you a little bit. You want to find out those price levels, you can book a call below. But for the shy people that aren't ready to do anything, a totally free mini-series. That's all I want you to do today. Click, drop an email. We send absolutely no spams. You'll get 1 newsletter a month, maybe 2 if we're feeling hardworking. And within that, you will get your video drops every day explaining a couple of small points for a few minutes a day. No long form videos, Francis. Simple points transferred to you simply in short form. That's right. Join it up and you can watch and get a feel for what we're about before even thinking about booking a call. Booking a call is scary. Someone else is going to be on the phone. They might be mean. They might be hostile. They're not, and they're not. But anyway, the possibility exists. He might be having a bad day. Anyway, off we go. Back to the gold markets. So that's your silver setup. That's your $330. You are in the 2-month period that it triggered. And in fact, let's take it to the monthly. You're in the monthly period that it triggered the previous month, but it had actually broke and feigned back, which is a classic part 1. We have 5 stages to a breakout. You'll learn all about that in our course materials, and you'll get a little hint about it and some information in the mini-series. If you click the link below, go watch a mini-series. It's really easy. All you have to do is drop your email and you'll get your video a day. So that is the beginning of a very long process to upside. That should see the world be a different place. There's going to be some funny-ass news that will have dropped between now and then, let me tell you. And by the way, many of these planners already know. They already know the little dastardly deeds. That's right. The little debt usury mercantilists, the extractors of days gone by that keep the peasant in their place while living the lordy life. They already know. They already know. Let's go to the gold markets. So this gold market chart is one I shared again through Twitter. It does have the upside HVF on it. So let's just be clear. 2 massive markets. Gold is massive, silver's medium. It's very easily manipulated with derivatives, let's say. It's not a massive market, not like oil or the other commodities. This is in an upside setup as well, but it is divided by the CPI AUCSL, which is the inflation rate. So instead of having this rising wedge, which I'll show you it without, we managed to construct a upside HVF of 56 years in the making. That's right, it's 56 years handsome, with a complexion for radio, I tell you. But never mind, it looks good to me, that little erectile projectile. Ooh, yes, sir. Look at that break. There she goes. It's broken the capping descending grind line. It's broken the just-in-time frame. You've got your squeezy little rising wedge that saw it absolutely start mooning as it crossed our axis point, and it is on a real tear, and it's got some way to go to get just to our 9.9 valuation, which is the gold divided by the assessed CPI AUS CSL factor, which, by the way, ends at 52 for its target. And you can't think of 52 watts. So just think this. If the CPI AU CSL stayed the same, and we are in an inflationary environment where I expect it to get a whole bunch worse, you will absolutely, if it stayed the same, which is the most bearish case, don't forget you're dividing by it, look at the formula, if it stayed the same, if it flatlined from here, this point at 8.6 to 52 is well over 6 times. It's well over 6 times. In price, don't forget, you're currently at 2,710, 20, who knows, it's changing every second. So you're going to get a major move. That's already taking you to 16,000. That's on an assumption of a number that should be escalating in a hyper-stagflationary environment that is accumulating and escalating on an ongoing basis, for which the flatline assumption is actually wrong. But just to give you an idea. So in short, gold is wealth preservation, my friends. Look at him, serious face. Gold is wealth preservation. You're going into this weekend with a message from your gold sponsor. Am I a gold bug? I'm not a gold bug. There'll be a time to sell. Right now, I'm a gold bug. Am I a perpetual gold bug? There were 40 years of financialization of everything from the Volcker high at $800, where gold was the worst holding, one of the worst holdings to have. It went from 800 to 250 in 2000, 257s in 2000. Gordon Brown, the Labour Party of the United Kingdom, currently sending British people that are funded by the British taxpayer to campaign for a Democrat Party to remain in power that is currently overseeing the biggest debt spike and destruction of the US dollar and dilution of you, my American citizens, you, my British citizens that are paying for this out of them to go there and interfere in an election. And I feel offended. And I wish to report this act to someone. I'm not quite sure who. So I'll report it to you right here on YouTube. Go make something of it, will ya? Complain. Do some shouting. Stamp your feet and buy gold. Buy gold, buy gold, buy gold. And then later, buy silver. The links are below for both that. Grab your mini series. This will go and go and go, and it will run. And it will even start the stirring of Bitcoin, which we've just also had an alert. A lot of alerts popping today while the live stream. It's meant to be. It's Freudian. In that order: gold, silver, silge, and Bitcoin. Sounds good to me. Sounds good to me. Does it sound good to you? This is the question. Enjoy your weekends. Live, drink, be merry, be happy. Start saving in gold ounces. Also have a couple of crypto. We got a winner crypto that will even outperform Bitcoin, but Bitcoin should be part of. Literally two, Bitcoin and one other. The dominance remains, stay in Bitcoin. That's for the crypto channel, however. Gold, 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 stay in it, gold, until such time as we get a sustained period of outperformance, which we will show you on the gold-silver ratio. Why don't I show you now? Let's be generous. You have a weekend. I'll make the video a tiny bit longer, shall I? So we'll go to the gold-silver ratio to show you exactly that. So we've had a little bit of silver action. Let's go 2 days, 3 days. You are still in the churn, and the last move was a very meaningful. We got faked in. We said that could be the beginning of the start going silver. Wrong. As it took our level out, feign and break. It broke, feigned back, and then actually once it had feigned back in, we stayed true to the possibility that silver might outperform. It melted to the other way. It did not comply. It did not comply, and that counts as a false alarm, a false break. And overall, our adjustment and our subsequent assessment of this is that you are in a capping descending grind line here. You are roughly at the midpoint. You broke down to the midpoint the last silver. You've actually been rallying. Gold's been outperforming. And literally today, as those silver were popping, you're getting a little bit of an inch down. And you could churn and mess around in this midpoint area and go back here. Our suspicion is gold could get so out of hand that you'll first have another attempt to get above, which means the gold will be outperforming the silver for a bit longer. When do we pivot? When do we start selling some gold ounces for silver ounces? It's already way too high, but the silver gets its Friday slam down, don't forget. We are a Friday. There's always a not-for-profit sale of great volume just at the close. Have you noticed that? It seems bizarre. It seems bizarre. One would say there's a conspiracy in there or two, but never mind. We won't say too much. That takeout of that level will be for us. And we'd also have a horizontal level. I would do it like that too. The 75 stroke, the basing ascending grind line, which I will double up, because I think that was actually a support. It stayed there, it bounced, it came back and supported, but it had a technical stab through. It's quite typical of price behavior to do that. That remains probably our first warning indicator. The break of the 75 is a major, major event. And next thing you know, it will be 65, and it could get disorderly. So for now, we're gold. And any place in between these two lines, the doubled line and this line, which I'll now make a tripled line, and the top one I'll now make a double line. Any place in between here, we bias to gold on the possible, not likely, not probable, potential break first to the upside before down. When we break these three, we start pivoting to silver, then we go hard silver when we break 75. So now you know. Now you know. You think you know all you need to know. Thanks, Sniper. You gave it away for free, you say. I don't need your mini-series. Click the link below. You need the mini-series. I don't need your community. Click the link below. Come and chat to the nice people that will be friendly and kind and listen to you how you are. And I don't need your gold. Please click the link below and support Pure Gold, rest of the world, or ITM for the US side. Get it delivered to your door, beautifully packaged. I have to tell you, I always give my silver one. Another excuse to get his block of silver out. Oh dear, oh dear. Look at it, look at it, look at it. That feels real. It is hard. I think you could put a dent in someone's skull pretty damn easily with that. It wouldn't have to be a real big swinger. You could just clunk them on the head. You see? Home defense in a condom. And of course, your balance sheet preserved. Beautiful stuff. Beautiful stuff. A dead old nag on the back, who I don't care for particularly, but I'll take the bull. I'll take the bull and the 4 9s. How about that? What do you want? You should get it too. Start with the gold. We'll pivot to the silver. You're going to be a winner. Enjoy your weekends. You know what you need to know. You know the debt will go no or low bid to the extent that there will be a disorderly decline. That is a prediction that I see is indeed possible. And the banks are now telling you they agree. We said it. Bank of America confirmed it. The last safe haven standing is good old XAU. Get in, get in, get in while you still can before it goes no offer. No offer, unobtainium. Dear oh dear me. That'll be a terrible one for those that have missed the bus. Till next time, catch you later. Thanks for watching.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.